Alrighty, traders. Alrighty. We are live. I think we are anyway. Yes, we are. Fantastic. Welcome, traders. Welcome to another edition of Market Update Time with your host, Johnny Howe. In today's session, we're going to be looking at the markets and we're going to be having a good look at what's really going on around the globe and what's been going on. I have noticed that we are starting to get some selling in silver and gold, which is quite interesting, right? Looks like that bear flag just maybe, coming into fruition right now. And maybe we're starting to see some more selling in the markets right now, which is really interesting to see. So we're going to be covering, going to be looking at the silver and gold market, especially that silver market. That silver market is starting to really give us a bit of a sign of where it may want to go on the short term anyway. And we'll be looking at the stock market as well. And then also we're going to be covering in this session today, the biggest myth in successful trading. The biggest myth in successful trading. And I want to share with you the number one thing that I thought so many times throughout my entire trading career so far that stopped me from moving forward. And this is the number one reason why 95% of people don't make money in the markets. And it wasn't until I got this and I started to apply it to my trading that things really started to ramp up for me. And I started to do really well. I started to take less trades. I started to have a higher win-loss ratio. My account kept growing month after month. And then things started to really work out for me. So I'm going to be covering that topic as well too after I get through the market update today and all that sort of stuff. So I'm going to be covering the market update and also that in today's session as well too. So before we do get started, guys, make sure you guys do not place a trade based on what you're seeing in this session today, because trading is risky and it can cause substantial financial loss. There's no guarantees of making a profit in the markets, especially if you don't know what you're doing and you don't have a plan and good risk management and so on and so forth, right? Even if you have the most amazing trading plan, you don't know which trade is going to be a profit trade, which one's not going to be a profit trade. All right, so please be smart about the way that you're trading and please protect your capital, okay? Protect your capital. Don't be placing shit trades. If there's something that's not right about a trade you're about to take or you're unsure about something, then don't take it. Wait for something that at least your intuition says, yes, this is a good trade. Not your ego, at least your intuition will at least guide you in the right direction. If you don't have a good, even if you don't have a good setup, listen to the intuition, not that ego. We're going to make a lot of money. You're going to make a lot of money. All right. And also, guys, if you haven't done so, make sure you go down and get the Grab the Markets by the Balls trading course. Retail $4.95. You can get it for $7 if you go to johnsflashsale.com. And you can get that if you haven't done it yet. And make sure you go through that, guys, because it really will help you out and get access to the membership area as well too. Also, guys, just before I do start, guys, I've opened up one spot to my weekly coaching program. So if you'd like to get access to my number one trading strategy, that gives me a 90+% success rate. If you'd like to have me as your coach there every single week, allowing you to become part of the weekly group coaching that I do every single week, having daily access to my private Facebook group where you see all my trades as well too, and also come and also get access to my platinum event where you come and live with me for 3 to 4 days. In a multi-million-dollar house. I bring a private chef in and we do nothing but talk about markets and all that sort of stuff as well too. Then the very first link in the description, go click on that, go fill out the application form and we can have a chat about that. I've just got one spot I've just opened up for the actual coaching program and the platinum event. I'm going to be running that over the next few months as well too. So I'll talk to you more about that on the application form. But if you're interested in that, then go fill out the application form and I'll speak to you soon. Let's get straight into the markets, guys. One thing I want to share with you is and looking at these markets right now is, bring this away, is I'm noticing right now that, let's start with the Dow Jones first. Okay, so the Dow Jones, one thing I'm noticing really still noticing on the Dow Jones is that we're still stuck in this sort of triangle pattern through here. And you can see how this sort of inverted potential inverted head and shoulder formation in the markets. It does look like it's still stuck in this sideways range. Sorry, still haven't gotten any true breakout here. You can see how today's candle just sort of it opened low and came down and sort of closed low. So we're still in this what we call time phase. We're still in this time phase where the market is going sideways and it's still indecision. It's like, are we going to continue the trend that happened, but that preceded this time phase, which is known also as a resting phase in the markets? Are we going to do that, or are we going to continue that, which is a break up and then another continuation of this upward move, or are we going to break down and out of this thing here? So that's what we're looking at. That is what we're looking at right now in the markets right now, guys, and we can see what's happening through here. You know what I mean? It's like we can see all this here. Now, whenever the market is going through what we call the time phase is when think about if you look at the market as two different phases, right? We have a price phase and we have a time phase. Or let's actually name it for what it really is. We have a directional phase where the market is actually moving in a direction, or we have a resting phase. Right, a directional phase and a resting phase, because that makes more sense to you, right? Like instead of saying price and time, like what does that mean? But if I say a directional means it's actually moving in a direction, then then that's it. But if it's going sideways, then it's resting, right? Think about that. What's happening right now, and especially what's happening right now on the Dow Jones. Now we can take away this sort of head and shoulder formation looking thing through here, okay? And what we're going to do right now is we're going to bam. So we're going to do that, okay? And we can see once again, we're still stuck in this overall sideways range through here. So it's really no confirmation of a breakout or anything like that right now. So it'd be really interesting to see where this is going to break out. Now the S&P 500, sort of the same thing, but we're still stuck here, aren't we? It looks like that we may be trying to roll over through here, and it looks like we're trying to just continue this little pullback through here. But notice how it came. And notice how if you watched yesterday's live stream, I talked about the closing prices being the most important to the market. And notice how with this trend line through here, notice how it actually went down below, but it couldn't close below this trend line. That's the reason why this trend line is so important to the market right now. And so you can see that through there. Now there's probably another 10 or maybe another dozen different trend lines you can have through here, but that's what we're looking at through there. And I am noticing that we are definitely getting a lot of support and resistance around this level through here. So this whole resistance level through here on the S&P is definitely becoming support. So we still could, guys, be getting a bit of upward movement from here. And if I bring up my actual other screen here, right, we still could be getting a bounce here in continuation. Moving on to the NASDAQ. All right, so the NASDAQ as well too, something sort of very similar as well too. We came down, rallied up, but we're still going through a bit of a pullback here. So if we're looking at this market, even if we're looking at, say, the NASDAQ, let's actually do this thing through here. All right, let's just remove this off here. What do we still have right now on the NASDAQ? And this is what's most important for us to say, okay, what's happening right now and not what we think, hope, or fear. So what is happening right now is that we had this low back here, okay? So this low back here, and then use this for any market really, and then we had this higher low through here. So as long as the buyers keep this period through here higher than this level through here, then the buyers are still in control. Okay, the buyers are still, which means we have an upward trend. And we never know when that upward trend is going to end. Makes sense? Like if you go back to here, right? If you go back to over here. Like as you can see, right? Like if you go through, if I bring up, let me bring up Snagit. Who likes Snagit? I like Snagit. I like Snagit. So if we have a look at, we got the good old Snagit tool. And as we can see, right, like if we look at this here, we have a low, then we have a higher low, run up, sideways, up, down. What is this? This is still a higher low, up, sideways, higher low, higher low. Ooh, come on, mouse, you can do it. And a higher low. Right, so as you can see, right, as long as the buyers keep raising their prices from here, But what is this here right now? As soon as we broke this low, this is now what? A potential what? Change in trend. So remember, this is called flowing with the market, being flexible with the market, not trying to force our opinions or our thoughts on it. And as you can see, this lower low here is now saying that, well, that could happen, all right? And as you can see, right, that, man, my wireless mouse, I'm not sure if my batteries are going dead or what. maybe my mouse is dying. And as you can see, right, that's when what? That's when the market started to change its tune. So if we're looking at this level here, and this was the last low, as soon as we started breaking this low, what did we have through here? We had a what? We had probably a bit of a double top, or even just slight lower low compared to this here. So a double top formation or a slight lower low breaking. So right here on this candle here breaking down, guess what? Who's now in control of this? Sellers, right? Because they've now we're talking about the daily chart here, okay, guys? Daily chart, the sellers could be in control right now, and then it drops for a few days, and then suddenly a week later, then the buyers get back in control. You know what I mean? That's where, like, when you're trading time frames like this, you must flow with the market. So as you can see, right, as this candle here broke down, guess what? Now and this has nothing to do with anything. This has nothing to do with anything apart from what the chart is telling us. Right, let's go back to here. Right, so as you can see, right, and then this is when what? When we break down, this is when we start to create what? Now we're creating a lower low and lower high. Who's in control? Sellers. Came down, get a pullback. That's how the markets work. Then we had what? Another lower high. Pull down, pull back. Who's still in control through here? Sellers, right? The sellers are still in control. So we cannot fight this market through here. Even though we get these pullbacks against what? A pullback, the sellers are still lowering their prices. Yes, it is just lowering their prices, but it's still lowering their prices. And until the market changes its tune like it did back here, then we cannot what? We cannot fight the market. High, lower high, lower high. Market went down sideways, then broke the previous lows, and then we started getting some strong selling off. Then the market had a really strong bounce. It came down, came back up. Now, guess what? Now we had this latest low through here. So we could sell off through here. And notice we're not selling off strong, right? It's not a strong sell-off, is it? It's quite a weak sell-off, which means we're just sort of just going sideways through here. This trend, the buyers are still in control, right? Just like over here. And if I bring up bring on Snagit. All right, so bring on Snagit through here. So if the buyers, like right here, right, this is when the sellers started to take control. And as long as the sellers keep lowering their prices, then they're in control, which means that if you think that the market is likely to start to continue up, there's like a very high probability that it's not going to happen just yet, right? Which means we're just trying to figure out, okay, who's in control of this market right now? Breaking our previous lows and the big sell-off, right? Now we have this low. Until this low through here, when the market continues to make lower highs and lower highs, then that's what's happening through there. And then when the market starts to change its tune, then now we have a higher high and now a higher low. Guess who's in control right now? Buyers. And we cannot 1 minute for 1 second, doesn't matter what our bias is on the market, doesn't matter what we think about the market, the market is always telling us what's going on. Now, as I said before, it's our job as a trader. That is our job. That's what we're paid to do, is to continue reading what the market is telling us. As the bars and the candles form on the charts, whether it's a 2-minute chart, a 5-minute chart, or an hourly chart, or a daily chart, or a weekly chart, it's our job to read what the market is continue telling us. And our job is to say who's in control right now. Who's in control? Are buyers in control? Are sellers in control? Or is no one in control? And right now, we clearly have still, to this day, buyers in control. Now, just because we have buyers in control doesn't mean we don't get pullbacks, because as you know, in a downward trend, you get your pullbacks. In an upward trend, you get your pullbacks. So this is where it's so important to continue to That's why I say. That's why I say trade what you see, not what you think, hope, or fear. So that's what we're seeing there right now, guys, in the markets. Okay, and so it's and the more that this starts to just continue go sideways through here, we're not getting any strong sell off here, not yet anyway. Let's actually go to here. Let's actually see what the volume is telling us right now. So SPY, look at this here, just lackluster. Okay, as long as, and I'll tell you what, guys, as long as if okay, let me say it again. I had two thoughts in my mind at one time. Woofa! I went to say two things at the same time. Dada. All right. First thing I was going to say, as long as the buyers stay above this low here on SPY, then the buyers are still in control. Second thing I was going to say at the exact same time is, as the longer this goes sideways through here like it is right now, and just small candle, small candle, small candle, the higher the probability is that we're now likely to see a continuation to the upside. Because what I've noticed time and time and time again is that the market likes to reverse or pause at significant levels. Reverse or pause. And that's where you see, that's where you see a lot of the time, right? If I bring up through here, that's where you see a lot of the times, right? But the market would come up, it would hit resistance, and then it'll reject off through there. That's called a reverse, right? This is a reverse point. Not a trend reversal, but just a reversal point. Or sometimes you see where the market comes up, it pauses for a little bit, and then continues. This is called a pause. And the longer it pauses, i.e. the longer it rests, the more it's building energy to go for another run. So that's what we're looking at through there, guys. It's really, 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 really important, you know. And in that John's flash sale, I really talk about some of the most important, three really important chart reading techniques to apply that just keeps you on tune with what the market's doing. Remember, guys, we never know what's going to happen, but we need to use these really foundational basics of how the markets work to keep us in tune with what the market is doing. All right, guys. So that's what we're looking at through there. I won't look at the other markets through there. Let's have a look at silver and gold right now. Let's go have a look at gold, and let's go have a look at see what gold's up to as well too. So gold right now, we're starting to slightly break out of this bear flag. We're not really, if I go to the GLD there, we're not really, gold is, it's a because we're not, I'm looking for some sort of strong directional move out of gold through here, but we're not getting that, not just yet anyway. We're still stuck in this nice trend line coming up through here. Let's go to say a 3-month view. All right, 3-month view. Let's go 3-4 months. There we go. So as you can see, right? But remember, as I said before, guys, right? Like we had this what? Low, as we saw on the stock market. Low. This is a lower low. This could be an indication. This is a warning sign that the sellers may be coming in. Okay? And the sellers may be coming in right now. It means the trend has changed. It means that there's no one in control right now because we're not making a lower low, lower high, breaking past previous lows. There's no one in control. All right. So right now it's a bit of a, are we gonna? A bit of a gunner, right? Are we going to continue selling off through here? I'm not getting a strong sign through there. But looking on the silver market, now we're talking. Now we're talking, right? Because we had this, we had this nice lower low, rallied up. Now we're breaking out on the downside on silver. And look at this. I'm going to the actual volume here. Bam. Right. If I go to the actual volume, here we go. Right. So as we can see, right, we're completely breaking out of this channel. And now we have what? Let's do this here. Let's go back to this chart here. I love my black open highlight close chart. It allows me just to see things a lot more clearer. So we have that there, right? But what do we have now? We have what? We have, you know what? Let's delete that trend line. So we have that down, because remember, guys, what do we have here? We had a higher low, higher low. This is the lower low. That lower low is what? It's a warning sign that the sellers could be coming into control. Remember, just like the stock market chart, what happened as soon as it started breaking this low through here? Actually, isn't this interesting? Doesn't this pattern here on silver, doesn't this look almost identical to This chart here looks almost identical to that Nasdaq chart, doesn't it? Where it had almost this one had a double top. Same in the Nasdaq, right? Had almost a double top. Then it broke down. We had a bit of a rally, and now we're breaking out again, aren't we? Breaking out of this upward movement through here. And so now, come on now, get my desk organized here. So now we're getting something like this here, aren't we? Where the market is, if I bring this up through here, all right, so I'm just trying to get, something going on through here to see if there is. All right, so somewhere through there, I would say. All right, so now we're getting this downward movement, aren't we? Getting this downward. We now potentially could be what? Now we could potentially be starting some sort of a channel here, aren't we? Now, if we do this, this is what I do, guys. So now I'm going to do is I'm going to see if I can identify this sort of a channel from here to here. I'm going to bring that down, and I'm going to see if that is more relevant than the other side. No, it's not. That's not. All right, so that's what we're looking at there right now. We're looking at that there. Once again, guys, just give me a minute. I'm doing my analysis on the fly here, as you can see, right? But I'm trying to see what's the most relevant trend line that I can use here. Let's just erase all. And then we're going to go to, all right, so I'm going to draw that trend line there. It's more like that, isn't it? It's more like that. If we do that, and then we do that, we didn't quite get there, did we? Not that quite put there. So that's what we're looking at there on that short term there. And now, geez, everything just went quiet, didn't it? Everything just went really, really quiet. So I'm just trying to find the most relevant trend line. We did have a trend line coming through here. We don't need that anymore. We know we had it. We know we made a major lower low. And once again, that's that trend line there that I'm probably going to be using mostly through there. Yeah, let's remove that there because now we're having a bit more of a steeper trend line, possibly down through there. That's the one. That's the one. See what I did just there, guys? So that's the one. Why? Because look at all that resistance through there. And then we came down and found support. See how we found support? So this angle through here, notice my tune just popped up a little bit, didn't it? Get excited about this stuff. Been doing stuff for 15 years. I still get excited. Good way to make money. Oh, I apologize about that. I'm drinking my green tea and lemon. So I got green tea and also lemon and ginger. So that's what's happening there right now. Plus we're getting we've got this lower low rallied up. Now we're breaking down. So now what we're looking at through here, if we bring up, say, once again, that 3-month view, and now we're going to bring up, say, just a couple more months through here. Yeah. All right. Anyway, so just 3-4 months, we can see once again, guys, lower low, now lower high, breaking down, and we're breaking out of this this upward movement. And now we've got this this is more of a downtrend, right? So we look at the last, say, 3 months, 3-4 months, we now have this new downtrend, double top, rallying down, rallying back up, lower high, and now we're breaking out with this volume increase. So now we have a very good chance of getting back down towards the bottom of this channel through here now. On silver and gold, I would have preferred to see a bit more of a breakout, but the market is telling us what? And if the market is telling us we had this low, which was a high low at the time, then it came down and created this lower low, which is what? A signal that the sellers may be coming in control. And then if we have a look at the Fibonacci tool, from the high to the low, we can see that what happened, it ran up less than 50%, and now it's rejecting. Now we're getting some a nice increase in volume through here, which is what? Which is now telling us that we're now likely to see a lot more follow through on the downside on silver there. We're not getting that that signal there on gold there as well. Makes sense, guys. So that's what we're seeing through there right now. And we're seeing that very, very, very clearly. So we have broken out now. We're in this nice, in the short term, we're on this nice downward trend. And even if we go to that weekly chart, right, that weekly chart still is intact as well too. So we're still creating. Remember, guys, we're still creating this big downward movement through here. In the in the markets there. So we do have, I'm noticing through here, we do have a lot of support and resistance around that level through there on that weekly chart here. So we go back to the daily chart now. Yeah, and that also meets down through there. So I am now we have a very high probability chance, guys, of this silver and gold actually selling off now towards the bottom of these levels through here. So there's a bit of an update for you guys. Let's go to the candlestick here for a minute, just so you guys can see what the candlestick's doing. You're noticing also the moving average is slightly pointing down as well too. We're breaking out now. Go to the 6-month view there. Let's blow that up. But there we go, guys. So that's what's happening right now on silver there, which is really, 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 really interesting. So yeah, that's silver. And if we go back to the GLD there, GLD is not really giving us a strong indication there, but the SLV is actually looking quite weak right now. So we should get a bit more follow through now down to around that $14 level right now. Again, on the short term there. So that's what I wanted to focus there, guys, in that session there. But what I also want to focus on today is I want to also talk about something about with your trading, okay? Something about with your trading and how your trading works and so on and so forth, because this is really, really, really important for your success and your success in the markets here, okay? Here is something that is so important to your success and your success in the markets, that if you don't do this, then it's going to be almost impossible for you to get ahead in the markets, okay? How I used to always think in the markets and how I always approached the markets was I was looking to trade a lot. I was always looking to trade a lot. So I was always looking to just be in everything. I had to be trading. It's like if I'm not in a trade, then I'm not making money. And then, so therefore, what's the use of me having a trading account if I'm not in a trade? And all this sort of stuff that actually happened around me not being in a trade. Right. So what will happen is because that was my thinking that I needed to be in trade to make money. So what ended up happening was I would just trade, right? And I'd try to pick bottoms. I'd try to pick tops. I got into things that I thought was a good idea. I'd overtrade. I'd double up. I'd put too much risk, and I'd do all these sort of things. And guess what ended up happening? A month later, I was saying, man, I just wish I was at break even, right? And you guys are probably there right now, because I was there for so many years. Man, I just wish I didn't even trade. But hang on a minute. What was the thought behind that? I need to be in everything that moves, right? Because if I'm not trading, I got money in the trading account, so I got to start trading so I can make money, right? And what ends up happening is that we end up starting to trade a lot. Call this person A, which is 95% of the people who trade these markets. Person A he's trying to pick a top, he's trying to pick a bottom. He might make money a little bit here and a little bit there, and he might do well in this trade here, but then he doubles up over here, and there's no consistency. And so therefore he's trading a lot and he's trading a lot and trading a lot. And almost on every single time you are trading like that, you're trying to get in on every single little move that happens in the markets, and you're now trading a lot, which is now over trading. You have no plan of attack. You're trying to pick a top. You're trying to pick a bottom. You're trying to get in because now it looks like a good idea, or you think it's a good idea. What is the number one thing that almost everything, and I guarantee every single person in this trading room, or in this room right now, or in this live session right now, has said that at least one thing in life? I just wish I was back at break even. I just wish I didn't even start trading in the first place. All right. We have said that. We all have been there, right? I just wish my account was back at break even, because there were so many times when I'd work hard at my job at the time when I first started, and then I'd fund my trading account with $20,000, and then 3 months later I'd blow it up. I'm like, what the hell happened? I just wish my account was back at break even at the time. And then I'd go save another 10 grand and I put that in there and I blow that up. I'm just like, what the hell's going on? Right? Because I had the mind frame, the foundations of looking at the market, thinking that because every single thing that I saw, I was thinking that I needed to know what was going to happen next. I needed to be right on every single thing. I needed to know, okay, what's going to happen here, what's going to happen there, and I needed to be in the market all the time, because if I'm not trading, I'm not making money. So therefore, you start to try to get into things because now you're trying to make money by just jumping in these things that just look okay, or you think it's a good idea. And by you doing that, you start to trade a lot. And when you start to trade a lot, you start to double up. And you might do well 2 or 3 or 4 or 5 times. But what's going to happen on that 6th trade? Bam, right? You get that big whack. You double up and triple up on your risk, and you wipe out all that profit. And what's that number one thing that we all say? I just wish my account was at break even. If I didn't trade at all, I'd be up. And this happened to me so many times throughout my trading career that I kept saying to myself, if I didn't trade at all, I'd be up right now. I'd still actually have the money that I had there in the first place. And then I did this a few more times because dumbass me had to keep doing it. But what I did differently this time is that, because my coach was telling me, listen, you're an idiot. You're still doing the same thing over and over again, expected results. So when I see Jesse B and some other people in the room, I can't really fault them, right? It took me a long time to get it as well too. But what my coach did say to me was like, right, if you have some sort of a trading plan on a spreadsheet, I want you to keep a detail of the trades that you do take, every single trade. And then I want you to have a comments column to say, did this trade meet this certain trading rules or not? And that's all I want you to do. And then 3 months later, I blew up another trading account. But this is where the learning started to happen. Because I realized over those 3 months that 80% of my losses came from those trades that I was trying to be right with the market, that I got in because it just looked good, or it was in a downtrend, or it was an upward trend, or it was just breaking out, or something else, right? I'd be honest with my comments column. So 80% of my losses came from that. And 85% of my profits, 80% of the profitable trades came from was actually close to 90, came from the trading system. I thought, hang on a minute. Last month, I took 12 trades. 3 of those were actually trading rules. 2 of those trades made really, really good profits, and 1 was a small loss. And then I had all these, and then I had, what was that, 12 trades? And then I had 8 or 9 trades that didn't meet the rules, and most of those were big losses. And then I had some profits in there as well too. And then I started looking at it, and I thought, and then that's when it clicked for me. I thought, hang on a minute. Here I am saying this again. If only I was back at break even, I'd be up. And then it started to connect and click with me that my over trading, me trying to be right with the market, me trying to force the market, me trying to think I know exactly where the top's going to be, where the bottom's going to be. Well, I know exactly what's going to happen tomorrow. And then doubling up and tripling up and all that sort of stuff. Trying to make a lot of money on one trade really, really quickly. Thinking this is going to be the big one. Golly, how many times have I put 25 grand on a trade and see that thing expire worthless? I'm not joking, right? And that's when it clicked for me. And I started to realize that if I haven't taken a trade for a month, I am up still. Why? Because I preserved my capital. I didn't place any bullshit trades. That's why I say to my private clients all the time that if you haven't had a trade for 2 weeks or 3 weeks or even a month, congratulations. You didn't take anything that you weren't 100% comfortable with, that you're 100% confident with. Because when that trade comes along that you are confident in taking, you will take it, and 90+% of those trades will do well. And we know that, right? There's at least 1 to 2 dozen trades that come throughout the year that if you've been trading for a while, you're like, wow, this looks good. Bam, get in. It makes profit. It's very easy, right? But it's all that other shit that we take that stops it. And that's why I'm so hard on my private clients on that number one thing, and that's patience. Patience, patience, patience. Because at the end of the day, number one thing is to preserve your capital. And so if I tell my private clients all the time, if there's a trade that you're about to take and you're still a bit unsure about something, don't take it. It's not worth it. Because when you start to be consistent, disciplined, and patient, especially disciplined to actually doing that, and you prove to yourself, wow, this system works, but not only that, but you prove to yourself that you can wait for these, that's when you start to have the confidence to start to put on, instead of $500 a trade or $1,000 a trade, now you can do $5,000 or 10 grand or 20 grand. You can start to build it up from there. 30 grand, 40 grand, 50 grand, and so on and so forth, right? We slowly build up to that point. But you can never get to that point if you don't trust yourself that you can wait for those aha setups. And so this is the number one biggest myth that we all go through as tradies, right? That stops us from moving forward in a big, big way. And that's why I always say to my private clients, like your first 2 to 3 months of joining my coaching program, you're going to find it difficult. You're going to find it tough because you're going to be doing something. You're going to be doing things that are completely the opposite to what you think you should be doing. Like your first month or two, you're going to be learning the system and learning exactly what a good setup looks like. And another month, you're going to be doing all your back testing, your research to build your confidence. And then your number one job is to not take anything unless it meets the rules 100%. And then guess what? Even when you do start trading, you're probably going to make a few mistakes. That's going to happen. But in the long run, when you do that, that's what happens. And so like with my coaching program, every single week I do a group coaching call, and I'm talking about this sort of stuff, sharing my trades, but I'm talking about these sort of things to keep them. This is the foundations to help them stay on the right curve. Because I say, listen, if you're disciplined this week, if you're consistent this week, if you're good this week, because I do a weekly group coaching call with them every single week. Right. And then at the end of the group coaching call, I turn the microphone on and it's like I have a one-on-one conversation with them and everyone else can hear. So we all can learn from it. Everyone can learn from each other. And I say to some of my private clients, I say, John, I haven't taken a trade in 2 weeks. And I said, how do you feel about that? And I'm so proud of my private clients because now they're getting it. They say, I feel amazing because I haven't taken any shit trades. And the trades that I went to take that I was uncertain about, they were losing trades. And I knew that 1 or 2 things that told me not to get involved with it, they were just enough not to tell me to get involved with it. He said, 2 weeks, but I haven't lost any money. He goes, so I'm still up. I'm like, wow, I'm so proud of my clients. And then guess what? That exact same private client who said that, the very next week he's posting on the Facebook group, because everyone has access to the private Facebook group where I post my trades, and then also my other private clients, they're all posting their trades or trades that they think that looks good if they're learning. So we all have a conversation and everyone's posting their trades and all that sort of stuff up there. And then the next week, because he didn't have a trade for 2 weeks, next week he posted 2 trades. Just one was like a 50% profit on an option, and the other one was like I don't know, 150 or 200% profit. Trading the stock market, following the system, and that's why I was just like, wow, I'm so proud of you. And then I get a phone call from a private client saying, John, thank you so much because now I'm starting to finally get it. Right. And we all know, right? We all know, we've all been there. We've all been there where we're like, I just wish my account was back at break even. Because if I was back at break even, I'd be up still. And that's where like I so force, and that's where that's the reason why with my coaching program, not only do you get the education, the workbook, sharing with you exactly what to look for, but every week I'm posting my trades, whether it's a 2-minute Forex trade or a hourly futures trade or a daily stock trade or a weekly trade for that matter. It's all the exact same setup. It's just different time frames. But I'm posting them up there to keep reinforcing and keep re-encouraging that, listen, here's the trades that are happening every single week. And so are my other private clients well too. Some of my private clients, they like to trade the first 1 to 2 hours of the market open, trading 15-minute charts and stuff like that of the stock market, trading options. Other people don't like to do that. Other people just like trading 1 hour a day and so on and so forth. But I have different private clients. But the system works across all markets. The system works across the stock market, the Forex market, the futures markets. It's the same system across all markets. So depending on how they want to trade, I have some private clients who just want to trade 1 hour a day. So they do their scans, they look at the stock market, and they trade the last hour, which means they're looking for trades right now. And then when they do find a trade, they get in. And sometimes that lasts a couple of days. And sometimes you have the setup that's gonna, that's likely to be lasting maybe 2, 3, 4 weeks. But depending on what they can do. Also, I have some private clients who like to sit in front of the screen for 3 or 4 or 5 hours in an afternoon, and watch the futures in the forex market, and look at the small time frames, the 2-minute charts, the 5-minute charts, the 15-minute charts, those time frames, and wait for the setups. But the number one most important thing I always tell them, that if you don't have 100% confidence in what you're about to take, then don't take it. Because once again, if the best trades, the most successful trade you're going to take is when everything about you is saying yes about this. Now, there's a difference between your ego screaming, saying, this is going to make you a fortune, this is going to make you a fortune, this is going to make you a fortune. I guarantee it. And you guys have been there before, right? And you guys have, I've been there many times. Every single time that I thought that this trade was going to make me a fortune, this is the trade that's going to make me a millionaire, I'd load up on 6 figures on that bitch. And every time it would like, no, I'd get out with an 80% loss or something, right? Every single time. And that's when I started to realize that, hang on a minute, that when I stick to my plan, I do well. And if there's no trades for even a couple of weeks or even for a month, then I'm still up. Because back at the days when I was trading a lot, guess what? I kept saying those words. If my account was at break even, I'd be up right now. But now I'm trying to chase my tail, because there we go. There's my 4th trading account with $20,000 that I put in there, and I blew that up once again. Man, if I just waited for those really good setups that I proved to myself, I'd be up right now. In fact, the amount of money, and then when I started calculating the amount of money that I was actually losing, because when I went through that 3-month sort of period where my mentor said to me, listen, you need to put on a spreadsheet everything. Does it meet the trading rules of this setup? Yes or no? And if no, what made you get into it, and so on and so forth? One thing that gave me so much pain, and one thing that made me click here, was when I started to look at my spreadsheet over the last 3 months, how much money I was actually losing on these trades by taking things that I thought, what I think, hope, or fear was a good trade. I think this is a good trade. I hope it looks like a good trade. I'm fear of missing out. And then I have 20% of my trades, which like, I got into this trade because it met all the trading rules. And that's why, guys, right now I'm so big on, and I link so much pain to taking shit trades, which simply means that I don't take anything unless it meets these certain rules. And that's one thing I'm so big with my private clients, is that when I teach them the system, the system is the easy part. You can get that in a couple of months. But then that's the reason why every single week for the rest of this year, and also the Facebook group as well too, I am there to give you confidence, but to keep you on track. Because I want you saying, I haven't taken a trade, like one of my private clients. I haven't taken a trade in 2 weeks, and I feel amazing because I'm still up. Because if I was trading like I was before, I'd be saying those words once again. I just wish I was back at break even. I just wish I didn't trade at all. And this is the mindset shift of how you think about your trading, how you approach your trading. I had, because I do my weekly group coaching calls every single week. And at the end of the group coaching calls, after me doing the coaching session, so on and so forth, generally goes for about an hour. I then ask people if they have any questions they want to ask me, and then I turn their microphone on, and then I have a one-on-one chat with them. And everyone else can hear all the conversations, therefore everyone can learn from each other. And one of the guys said, John, the best thing that I learned from you as soon as I joined this program is to stop trading. He goes, because every single week I was losing money. I was losing money. He said, the best thing that I actually did with you was actually to stop trading. He goes, because now I'm not losing money. Now I've got the money sitting there, but guess what? I'm not losing it. It's there. It's what and it's there. and it's there and it's ready for me when I actually become confident to actually start trading. Now he's just a newbie, and he's only been part of the program for a couple months. But I told my private coaching clients, it takes a good 2 to 3 months to really start to get a good understanding of what a good setup looks like, and for you to build your confidence in that. You got to build that foundational work, and that's the reason why I do those weekly group coaching calls, and I do the Q&A where I can answer one-on-one questions. And every day I'm on the Facebook group answering questions to keep people on track, because 10% of your success comes from the system, and 90% of your success comes from the things that I'm talking about right now. We've all been there, right? We've all been there. And too many times, I'd look at my career, I'm just saying, man, I just wish I didn't even start trading at all. Because I'd have like 100 grand in my account right now, and now I've got zero, and now I'm trying to save more money up. And that's what I was thinking when I first started. And there's another $10,000 trading going on. Why do I keep losing? Oh, geez. Why do I keep losing money? Right? But then it changed. Everything changed for me. I trade less. I'm no longer worried about if the market goes up a lot or down a lot, or it does. I see all these markets, because when I'm trading the Forex and futures markets, especially when you look at the smaller time frames, 2-minute charts and 5-minute charts, right? You see a lot of activity happening over a 5 to 6 hour period. So I see the market going up a lot, the market going down a lot, the market going sideways. All these things are happening. I'm watching about probably 10 different markets as well too, because all I'm looking for is my setup and my trading. That's, I know exactly what I'm looking for. So it's easy to scan those time frames to see what I'm looking for. And so when I do that, I'm not worried anymore about things going up and things. I'm just like, no, my job is I don't care what happens until I see my setup. That's when I trade. And I'm going to sit here for 6 hours today. And if I don't have a trade, then come back tomorrow, and then come back the next day. And I may have to do that for a whole month and have no trades. But what happens if the next month there's 4 really good trades? 4 really good trades. And let's just say, for example, those 4 really good trades, because you stuck to the plan, you're now doing $20,000 each. Right? And let's just say, for example, on average, you're making 50% return on these 4 really good trades, right? One made a 25% return, the other one made a 100% return, the other one made a 200% return, and maybe there was a small break even or a small loss or something like that on the other one, right? Call it that. But it was a 50% return on average. Your account now is up. Your account is now up 40 grand. Thank God I didn't take those shit trades last month when there wasn't anything there. And then over the 12-month period, when you look at where, person A who trades a lot and person B waits for their setups, we are all going to arrive somewhere at the end of this year. Please don't be one of those traders that says, I just wish I was back at break even, I'd be up. Please don't say that. And that's why, once again, guys, with my private coaching clients, that's the reason why I'm there every single week with the group coaching calls, and then also every day on the Facebook group sharing my trades. And if there hasn't been a trade for the whole week, guess what? I put up there, guys, I haven't had a trade for the whole week. Continue being patient. Continue. And I'd keep reinforcing this so they stay on track. And before you know it, clicking a button and putting a $10,000 or $20,000 trade on would just be like clicking the button, and you'd have no problems at all, because if it is a losing trade, it's going to be a small losing trade, and most of the trades you're going to take, it's going to be a nice profitable trade. And when you get to that point, you don't need too many really good trades throughout the entire year for you to start to become a really good trader. And then when you start to get to the point where you start to do, say, $50,000 a trade, now you're doing, and now when you start to do those sort of numbers and you're doing 50% return, as I said before, right? The exact same thing about 50% return. You're now some months now that's a 6-figure month. Now you're in the makings of becoming a 7-figure trader that year. Making 7 figures from the markets. That's how it starts, right? Now, some months it's going to be very quiet and some months it's going to be really busy. But when you start to approach that way, that's where, like with two of my seven-figure mentors, my very first seven-figure mentor who turned $5,000, actually he blew up a lot of trading accounts first and then took 5,000 to 3 million in 5 years. It wasn't until he started teaching the things that I'm teaching, that I'm sharing with you guys right now, that he started to get it right. He said, "I'll wait as long as I have to put a trade on." And same with my current mentor right now. Makes a fortune, multiple seven-figure trader, meaning he makes multiple seven figures per year. Number one thing he just keeps saying, don't take shit trades. If it's being quiet, just let it go, right? Do not take shit trades. And so because I've learned that through my pain, and the unfortunate thing, right, is us humans, especially us guys, what do we do? What do we do? We just like, oh yeah, I get that. Let's go do it again. Us guys, we're stupid, aren't we? Or I wouldn't say stupid, but we're just like, we're so simple. And because we like to be right, it's like all this fighting. So that's what I want to talk about right now, guys. I'm going to do a bit of a Q&A. Guys, as I said before, if you are interested in my coaching program, if you'd like to get access to my coaching program and have me there, part of that, then there's a very first link in the description. Go click on that. Go fill out the application form, and I'll speak to you on the phone to see if you're a good fit for that or not. What I want to do now, guys, I'm just going to take a quick 30-second break. I've been drinking a lot of liquid this morning. And I'm going to go through the questions. All right. So I'll be back in about 30 seconds, guys. And then I'll get a start. I'll take. All righty, guys. I am back. Let's actually, here we go. Let's actually go through. I've been drinking a lot of beer. I saw that. All right, let me go back up to the top now, guys. All righty. Guys, give me a yes in the chat box if you enjoyed that last bit about the foundations and how to approach the market, how to think about the market in a different way. Give me a yes in the chat box if you enjoyed that. Let's go through now some questions, and we'll go from there. Once again, guys, the very first link in the description if you're interested in if you are interested in the coaching program, the very first link in the description. Alrighty, guys. So let's actually go through. Alrighty, let's go through the chat box. S&P 1 hour shorted at 219 on the third tap, made a lower high. Good day trade, fantastic. IBB looks like to start rolling over. The days to come will be interesting. IBB. Let's have a look at IBB. IBB. Yes, I agree with that there, Minnie. Minin? I apologize, I'm getting the name wrong. But yes, we made this major lower low here on this weekly chart. All right, so we made this major lower low. This could be some sort of lower high through here. We do have the next level of level is around that $100 level there on that weekly chart. So if we go to the daily chart, if we get some sort of close below this sort of level through here and a strong bar breakdown, then we're probably going to run to that $100 level, have a little bit of a pause there, but then ultimately probably even head back down towards these lows through here. So yeah, very, very, very good point. It definitely did make a major lower high, and even actually, yeah, good. What you're saying there, even here on the daily chart, and I think that's what you're focusing on there. Made this lower low. Look at this here. Made a lower low, ran up, lower high, and now breaking down sideways. So we get some sort of strong breakdown. Guess what? And now, what is time? For you guys that were listening to me today, when the market goes sideways, call this time. What is the market doing? When the market goes sideways, time, I talked about today, what is the market doing? The first person that gets it, what's the market doing? It's what? First person that gets it gets a cookie. Gets a cookie. Alrighty. What are the changes that triangle false breakout on the first drop? What are the changes that the triangle, i.e. Dow Jones, all right, let's go to the Dow Jones. What are the false breakout first before then the drop? Oh, what are the chances? Oh, okay, what are the chances that or does the triangle ultimately break out? Well, that's the thing, right, Paleo, right? That's the thing, right? Like we never know. We never, ever know. Actually, you know what? Paleo? Again, I'm going to call you Pal. All right. Do you know really interesting? I'm actually reading a dating book right now, a relationship book right now, based on masculine and feminine energy. And there's actually a story in there. And the case study that the name was that this person was a very cocky, very arrogant, very he's a player basically. So maybe that's you. He's a player. He's very charming to the ladies and all that sort of stuff. But in his circle, he doesn't have a good name to himself because he doesn't have a good name because everyone knows he's a player and all that sort of stuff. So maybe that's you or not, but it's the exact same name. I actually read that this morning when I was at the gym. And I'm like, there you go. So you know, the thing is, by looking at this triangle pattern through here, yeah, we could get a false breakout. All right, we could get some sort of false breakout. Now, the false breakout, Paleo, the false breakout will generally come determining the false breakout on anything generally comes from either two things that happen in the markets. All right, now this is actually really, really interesting. Let me bring up the Snagit tool again. Bring up the Snagit tool. All right, here we go. All right, so there's either two things that causes a false breakout in the markets. All right. Whenever we're looking at some sort of false breakout, okay. So the first thing is this: the number one thing that causes a false breakout is that we haven't had enough time. So if the market has a big run up through here like this, and then we have a short time, meaning it has a big run up, and then we go sideways for a while, and then we break out. Well, due to the fact that we had a lot of movement up through here. And then what? And then a little movement through here. It wasn't much of a sideways because we had a big run up and then a sideways. Whenever you get this sort of bar in this situation, it hasn't had enough time. It hasn't had enough time to refuel because because we had a long run. We used a lot of fuel here. So therefore we need a lot of time to refuel. And if this happens, that's the first scenario that's going to cause a false breakout. The second scenario that's going to cause a false breakout, and let me just delete this over here. The second scenario is going to be that you actually get too much of a big bar, right? So let's say, for example, the market does this here, right? Market does something like that, all right? Bit of a triangle pattern, so to speak. But then suddenly you get a bar that looks like this here, right? So it's a very huge bar. The very huge bar, if you measure from the top of this bar and you measure it down like that, like a sideways, if this bar is way over the amount of time that this thing has gone sideways, then if you think about, this is all the fuel that the car has, or that whatever. This is all the energy that has. But if this energy is now released on this movement up, now it's this one big spike up has used all this fuel in one big go. In one big go. And that's going to cause something like this to happen. It might, and then it might just, and it might have a bit of a pullback, or it might not. But that's what's caused to do that. So it's either that, but generally speaking, on a false breakout scenario, it's more like number one there. But even without this, sometimes, and like, actually number three, if I do this here, number three would be is that if we get some sort of triangle pattern, right? Something like this here. And then we get like just a small bar like that, where it's just a small breakout, right? It's a small breakout, but it's a small breakout, and there's like very little volume behind it. Then that's likely to be some sort of false breakout, because it's not a strong bar. But if we get a bar that looks something like this here, where it's a very big bar, but we had a big volume spike behind it, that's now a bit more confirmation that we're now following through, and now we are likely to see a continuation of that movement there. So they are the different types of false breakouts in the markets, and that's why I say the better you can read the chart, the better trader you'll be. And that's with that John's flash sale that I'm running. That's the reason why I teach you some of the most important things. But these are the main things that's going to cause a false breakout in the market. So whenever you see this, most of them will come from number one, where you get a run up and you won't have that. But sometimes you get a small breakout with very low volume. Volume is very key, especially when you're trading the stock market. Futures and Forex, I don't really worry about it, but I really focus on the bar, right? Because I want to see the bar. If we've had enough sideways movement through here, then I want to see a nice, good breakaway bar to say we're definitely in control. Because if the market's gone sideways, if the market's been going sideways for quite some time, it's very volatile, and then you get a big breakout bar, but it's not too big, and say it's only to there, then we still have a lot more fuel to run for that thing to continue going. This is some of the advanced stuff, guys, that I don't normally talk about, but this is how you determine whether a thing's going to be a false breakout, or either you may get the perfect scenario, just like over here. You may get the perfect scenario, and then guess what? It just stops, right? It just stops, and then it just goes sideways like this. So it breaks out, build up, breaks out, even though it's got a lot of fuel there, it breaks out, and then it just goes sideways. If that happens more times than not, it's gonna do this here. It's gonna completely reverse. And now here's the flip side, right? If you're looking at this scenario through here, if that does happen and we do get a false breakout, now guess what? Now the market has probably like an 80% probability of getting back down towards these lows through here. And so you probably see a nice drop back down towards the lows if there was some sort of channel or triangle pattern, something like that. You see this time and time again. So this is, and that's why I say, guys, like for me personally, I have, and you can see from the things I'm teaching right now, most of my time is spent on the actual chart itself. As you can see, right, it has nothing to do with indicators and everything to do with what the market is telling me right now. So I have no idea why I went on that little tangent there, but a little tangent, but there you go. So guys, and that's where, like, with my, once again, like with my weekly coaching program, guys, that's where, like, every single week I'm sharing things like this with my private clients to make sure that I'm keeping them on track of becoming a good trader, and not just understand the trading systems and being patient, but things like I just taught you just then as well too. So if that private coaching group sounds good to you, go fill out the application. I'll speak to you soon. All right, I got to continue now on the questions. If it cracks, what lines of support are you looking at? Snag it. Snug it. I do like nuggets, by the way. I think you're talking about. I think you're talking about like the silver price there, the SLV. So the SLV price, if it loads up on, it's probably that bottom bit through there. Yeah, so this will bring up the SLV price. So yeah, so I see silver, the SLV price anyway, down towards the $14 level. That's where I see it coming down now. So there is no if scenarios anymore, guys. There is no if scenarios anymore. For you guys. Oh, good on you, John. Don't get your niggas in it all, mate. As we stand at the moment, buyers are still in control. On the stock market, yes. On the metals, no. Right? Which is really interesting because if you look at the US dollar, my software has been so low today. If you look at the US dollar, it's building a lot of strength, and it looks like we're getting ready for a nice big blast off. So what I was saying before about triangle pattern, right? We want to see a very big, strong breakout week on this US dollar. If that happens and we get a lot of volume behind it on the UUP, then guess what? She'll be coming around the mountain when she comes, and she'll be heading all the way up to that $29 level. I know that sounds crazy, but that's the projection. Maybe if you go to use to there, maybe it's down like to maybe even 28 to be conservative, right? But it's still quite a fair way to go. So, and maybe I will be placing a trade on the UUP. I'm just waiting to see what it does first. I want to see what type of candle I get, because if we do get a big breakout candle, then that's probably going to be a bit of confirmation for me to trade that sucker and ride it all the way up to 28. I won't be doing that, but I'll be managing the trade. Anyway, as you can see, guys, I love what I do. I really, really love what I do, especially when I get a good night's sleep. Scary true, John. Trading is waiting. You better believe that. Yeah. In trading, there are speculative setups. Then there are confirmed setups. Confirmed is usually when you get in because it meets certain rules. But the question is, how do you know you're not missing the meat of the move? Like, what if the confirmed entry is already after the $3 move on the SPY, when the total move, for the example, is $4? Paleo. So now, so what you're trying to do is so now what you're doing is let's say, for example, you have a trading setup, but you get into the trade, and if you do get into a trade, and even though you made a profit on that trade, and because it kept running on, now you're pissed because you didn't make more profit. Now you're on the other side of it. You went from, I just wish my account was back at break even, to like saying, damn, I missed out on more. I could have held on for more profit. Don't do that to yourself. Don't do that to yourself. Right? Do not do that to yourself. Say, you know what? I got into a trade today, and if it met some certain rules, your job is to manage it as much as possible. And then if you can get out with a nice profit, you say, you know what? I am so grateful that I just made a profitable trade and my account is going up. Thank you very much for that. Next. And I'll give you a really, 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 did I say really? A really good example. A really good example. On the crypto market here. Now, I'm going to give you a really good example of a trade that I did on the crypto market. I'm bringing up investing.com because I haven't got my futures and Forex platform open. Now, if people are wondering what I use for that, right now I'm using IG.com for my broker, and then I'm using Pro Realtime, which is connected to, that's the software, which is connected to the actual brokering platform. And then I use my Forex, my futures, and also my crypto trading as well too through that. What I will be doing soon for my Forex and futures trading, not the crypto trading, But Forex and futures trading is I'm going to be going over to Ninja Trader because there is no spread. It's just commissions. So that's what I use. And then for my stock trading, I use TC2000 to do all my stock trading, ETF trading, my options trading. I use TC2000 to do my scans, all that sort of stuff. And then I use Interactive Brokers to place my options trades. So let's look at this one here, right? I'll give you an example of what I mean here. So on Bitcoin, right? On Bitcoin, let me do this here. We never, ever want to say, oh man, I missed the top, missed the bottom, right? So what happened is that this breakout bar here was the confirmation for me to actually have a short trade, right? It was a confirmation to me have a short trade. So that's where I entered in. That's why I entered in. And then the market went down, and I was bringing my stop down, and then I brought my stop down to here. At this point through here, it took me out. And then I continued running on, but then it bottomed out. So I grabbed to say about 70% of the move. If you can do that, grab say 70% of the move, then guess what? Legend, right? You did a good job because you can't pick the exact bottom and the exact top. If you can get the meat, then that's what it's all about. That was my short trade. By the way, that's my only crypto trade ever. And it was a short trade on Bitcoin. So I hope you can see what I mean by that is by looking at the crypto market there. Bam. So I hope that makes sense there. I can't wait to sleep in that mansion with you. Fantastic. Chef is gonna hand feed us grapes. No, definitely not. But I definitely do have a private chef that comes in and does and I bring a private chef in and they basically take care of all the food, and then throughout the day, you come and So with that, what happens is that you come and live with me. So it's a house, beautiful $1 million house on the water. It's generally on the Gold Coast in Australia, so that's where it is. Generally on the Gold Coast. It's 3 or 4 days. I haven't got the exact dates to it yet, but I'll talk more about that on the phone. And then throughout the day, I do my trading on the stock market. I do my trading on the Forex market. And then throughout the day, it's like 12-hour days, jam-packed. I'm teaching you all the things that I know about the stock market, reading the charts, trade management, and so on and so forth. And then it's like repetition. But then not only that, but you'll be able to see how you'll be able to see my morning rituals, like what I do in the morning, what sort of drinks do I have, how do I get my mind right, all that sort of stuff. Alrighty, guys. So I hope that makes sense. When you trade because of your dreams. Don't trade your dreams away. Well, we all have dreams, but my dating coach, one of my dating and relationship coaches, he said, you know what? Whenever you're working hard and you're doing things, right? And you're going nice and you're doing your work. You're not trying to rush it. You're just nicely calm, just doing your work. He said, that's like you on the train and the train is going towards its destination. Your train for the train for enlightenment is on its way to its destination. Your train for enlightenment is on its way to its destination. But if you start to run around like a madman, like a crazy madman, trying to force and rush, you're probably going to end up hitting a pole, knocking yourself out. The train has to stop, and now you get taken off the train for a while, and then you got to spend a bit of time reassessing to then get back on the train again. My point I'm trying to say is that most people are doing well with their trading, but they're rushing and forcing it too much, like I've been saying today. I've been drinking a lot of beer, yes. Yes, John, you're the man. Fantastic. Hope everyone has a good evening. Hey, Nathan. Josh Gray. Building that energy. Yes, exactly. Exactly, Josh. If you have not taken advantage of the $7 a month training, what's wrong with you? S&P. Oh, AD making 12.29. Did have you enjoyed it, or did you enjoy it, or are you enjoying the training? There's like 12 videos there. So they're like, I don't know, 30, 40 minutes long, some of them. And it's $7 because I just want to get people started on the right foot. That's all. It's not meant to make you a millionaire or anything like that. While the techniques in there is going to really, really help you. Fantastic, fantastic. Bought DSLV. DSLV. What is that? Oh, the inverse shares. Okay. People like those 3 times, don't they? And DUST. DUST is still in a downward trend, lower highs, still getting some sort of lower high through here, and we're breaking down towards lows through there. So buying DUST is a very risky strategy because you're going against the trend. Don't fight the trend. Don't fight the market. You're not smarter than the markets. The market's still stepping down. You may be right here, but it's gambling. The market's still making lower highs, lower lows. Look at the moving average as well too. So you may be right here, but don't fight that. At least with DSLV, right? At least with this one, right? You're getting some sort of higher high through here, and now potentially a higher low. We haven't got the higher low yet, but this where at least you got some sort of indication of turning, right? This is so much. This is so much more higher probability. Why? Because the market created look at this here, high, lower, low. Look what happened here. We had a low, sorry, lower, high. We had a low, then came down, made a lower low, ran up, made a lower high, came down, made a double bottom, then ran up. So what is this here? The potential change in trend, right? Higher low, higher high. This could be some sort of higher low through here, and away we go. This here is so much more high probability. I'm not saying it's a certainty. No, it's not a certainty. But it's so much more high probability than dust. Dust. It doesn't matter what you think about anything else. If that particular market is on a downward slope, don't fight the market. You're only gambling. You are only gambling. So dust for that reason is a much more higher probability setup for that reason. But still, it's never about one trade. This one here has a success rate. I would call it a 75% success rate, this particular setup here on dust. Oh, sorry, DSLV. Dust, you have like a 20% success rate on that thing because the market's still going down. You don't know when it's going to end. But DSLV is probably like a 75% success rate. Now, a 75% success rate simply means that you have to take 10 trades of the exact same setup for you to figure out what that success rate is. This trade here that you take could be part of the 25% of the losing trades. And that's where trading comes involved in. I hope that makes sense there. Alrighty, guys. Well, man, that is it for me. I've had a lot of fun today doing this session for you guys. A lot of fun, guys. If you haven't grabbed the trading course flash sale yet, go to John's flash sale. And once again, guys, if you would like to join my weekly coaching program, I've just opened a spot for that. If you'd like to get access to that and see if we're a good fit, then the very first link in the description, go click on that, fill out the application form, and I will speak to you soon on the phone and see if we're a good fit. And then also I'll talk to you about come and live with me for 3 or 4 days. So we can do that as well too. So I'm happy to talk to you about that as well. All right, guys, have an amazing day. Kick ass, take names, and kiss babies. See you guys.